Crypto Mondays Vilnius is a monthly meetup that we are committed to running because there's a great interest and great things happening in Lithuanian crypto ecosystem. To my knowledge, there are between 30 and 50 crypto startups that have raised serious money last year and are building stuff. There are quite a few more, even today, fundraising for their crypto Web3 projects. Therefore, we see a huge need to share knowledge and connect ourselves to the wider ecosystem globally. But also, in addition to being a meetup, we are going through some pertinent topics that are relevant to founders. And today, we will discuss tokenomics. So without further ado, let's go for a hedge fund to explain, what is a token economy in a nutshell. From investor perspective, you could invest in equity. Everyone understands what that is, but what is an investment into a token?
So I think investment into a token depends on the project. First of all, I think tokens allows to raise funding easier and for people to access the market way easier. I don't really can express what is the token economy because it really depends on the project. I see a lot of projects in the crypto market that call themselves blockchain or crypto projects, but actually they don't even need it, right? I think it's a good mental tactic to flip the valuation of the company, and the underlying question is always to be answered is whether this protocol actually needs a token and where you can use it. And we saw in 2017 with the boom of ICOs that these projects, like they said, okay, buy my tokens and then in 5 years I'll create a product. And people believe they gave their money to these projects. And then when the project started building, they understood, okay, maybe no one in the world has ever solved this problem and I don't know how much time I will need to do this project and to kind of make it a reality, and then it ended up in a bust because there was no plan. So I think for now, and what the market, at least the decentralized finance market is evolving, is that people are trying and projects and teams are building protocols and services first, right? And sometimes, like Uniswap, I'm sure that a lot of you have heard about it, they first build the platform, the protocol that served the function, and only after that they created a token. And I see that this is a way, way more valuable road to go, is that you first kind of have a proof of concept that something that you're building is actually working or needed in the market or people are responding, and then you kind of can issue a token on top of that. Of course, it's a problem because then you cannot get 10 million before launching a product. But for me, I think it's a more sustainable way. And I see that valuable projects with promising ideas and capable teams of delivering their missions are going increasingly this way. I don't know if that's the same view that Šarūnas is having, but at least that's my perspective on the matter.
So how does token-only market look like, and how do token-only investors behave?
I think everything you guys just talked is more like a result, right? I would take a few steps back, and I think originally token design was to power the project ecosystem, right? So forget about raising funds, forget is it better, is it worse for the investors. But if you really go back to the crypto roots, right, the whole idea is to kind of have a unified currency in the ecosystem, right, that could be used, and it simplifies a lot of things. There's less friction and so on, so on, so on. Yes, the token economy is used as a fundraising mechanism, and people can correct me if I'm wrong, but I think Ethereum was one of the successful ICOs, where Vitalik said, oh, Bitcoin is not great, I'm gonna build a better Bitcoin, and raise 27 whatever million and get a lot of people community involved in the project, right? So I think in the first place, token you should think from a tokenomics perspective. We always think, and when I meet a lot of founders, they always think as a vehicle to raise money, right? And I understand this is the reality that we have, but if we can go a few steps back, originally it should be viewed as a what is the token utility and how it can help the project and the product and so on, right? Then if you look from the founder perspective, obviously it's a great vehicle to raise money and get your first users, right? Because what we've seen in 2017, despite that it was a big boom and everyone was building everything, but at the core value, it was like, it's like Vitalik came and said, I'm going to build a better Bitcoin, but I just need some extra money, and people who are interested join me, right? So basically, whatever, a few thousand people put money together, he got his 20 million to kick things off, plus he got a lot of developers that got a lot of tokens, and then even without the salary, were motivated to build the system, and this is how you get the community, right? And I think in digital products, it's all about the community. One of the main things that you can expect of a good product is a community. So that's the vehicle of all the community to have a stake in the project, right? So that's why, even though I'm not a founder, I don't have shares in a certain product, but because I bought 5 tokens, I want to tweet about them, I want to tell somebody when I have a beer, and so on and so on. So these things help a lot. Then looking from on the other side, there is an investor who's investing and buying in the project. So all the deals I've seen, and there are, I don't know, 20, 25 deals in total, they all were token deals, right? So not nobody, but I think there's less interest in equity, because everyone, I bet a lot of people here have been an angel investor, or invested in something. If the company is not public, if it's a super young company, you know that you cannot liquidate your equity for at least next 5 years as a minimum. Most probably never, or in the best case scenario in 10 years, right? So why would I want to be, and how can I be excited about something when, I kind of give somebody money and forget it for 10 years, right? So I think with tokens, it's much easier, because I can actually give my $1,000, get some tokens, and like they do an IDO, they launch the token in a couple of weeks, and I'm already part of the economy. If I want, I can liquidate, I can buy more. I think it's more liquid, and that's why investors, I think, really like it. I personally also, I always try to go into token investments rather than equity investments, just for that reason of liquidity. Yeah.
But can I rebut? Don't you think that this excessive or instant liquidity, if we may call it, is a kind of double-edged sword? Because first of all, there is if you really believe in a startup and you have built businesses yourself, you understand that you cannot make or build a business in 3 or 6 months, right? You need to some time for it to be really developed. So maybe as a startup investor, you should have the time horizon of at least three years. And then on the other side, this instant liquidity is okay when there's this called a fair launch, where everyone has the same conditions to enter into the sale. But in terms of venture capital, basically the name of the game is that the venture capital can allocate a bigger ticket, so they expect a discount on the token. And then what happens when the token hits the secondary market? The VCs just dump on retail, which is like the phrase in the market, and then it kind of wrecks the initial launch of the token of the community. Because I really, let's say I'm a retailer, I have 10,000 to put into some just token that is launching. I enter into IDO phase. I see the price is just accumulating for one day, and then the VCs who entered before me at, I don't know, 70% discount on the token, they just dump on me to kind of, so I'm paying for them to repay, to cash out their initial investment, and then it's a fair game, but the price of the token is way lower than it should be. So for me, it's kind of this liquidity and we're only investing in projects and protocols that are liquid as a hedge fund, but as a startup funding mechanism, I think it's kind of there's pros and cons to it. What do you think?
100%. So I think everything comes at a price, and that's why I think for those who were involved in crypto, have been involved for a couple of years, you can really see a major shift. Like the old tokenomics is maturing, right? So if we look at back 2017, the money raising vehicle was retail, right? So I'll make a nice web page. You know, I get people excited. I buy, I don't know, users, and they invest, right? So I don't know, you collect 20 million from 15,000 people. But what happens, you know, what happened usually that on a day one, when you get listed in an exchange, you know, majority of these users are uncontrolled and they are like all dump, and it was basically I don't know, way of no return to like stabilizing the price. What happened after the 2018, 2019, and in 2020, right, VCs were introduced. Because if you look at 2017, VCs were not part of that game. Everything was about retail, community, blah, 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 all that kind of jazz, right? But in 2018, I think VCs started to come in place. And one of the reasons for that was that they come in early, right? They invest. Some get some discounts, some don't. It's another question to argue. And then, and these investors are locked, right? So basically, I haven't seen a project in the last couple of years that investors wouldn't be locked, right? So basically, at least they get, I don't know, 10% unlocked on the TG day and then 10% every month and so on. And even that didn't work, like, really well, because 10% unlock for the investor is really, really huge. So they still can impact. But for instance, and founders and the community understand that, so that shift is really big. Now, so for instance, I 2 weeks ago invested in a new project just as an angel investor, and actually I am locked for 12 months. So basically, I'm waiting now. I gave them my money. You know, they're building the product. They're looking when to do an IDO, let's say in the next 6 months. And then when IDO happens, I'm going to be locked for 12 months. I have 0 tokens, and then only like linearly over the next 3 years, right? So that's actually a fundamental shift. I think the community and the industry is learning by its mistakes. And it came from wild, wild west of retail, raising a lot of money, and everyone's dumping and like no chance of survival. Then VCs came with some unlocks. Everyone saw that these unlocks are still not enough. So I think it's pushing forward. I don't know what's going to be the mechanism in the next bull run or something, but what I'm seeing that investors are being pushed to the corner. It's not going to be as easy as it used to be.
Don't you think we're at some point we're just going to have a tokenized equity and it's going to be just the same?
I don't know, maybe. I mean, I cannot guess where it happens. And just coming back to your point, I totally agree that if I support a project, I understand that the products have to be built for many years and all that kind of stuff. But still, as an investor, I prefer to have the freedom to liquidate my position whenever I want, right? So that's why I think I really like that, and I think that's why people are excited about token investments over equity investments. But I think in the biggest funds like A16Z and so on, usually they are going double, so they take equity and tokens.
So my job, my job will be easy today because we self-moderate, and answer all the questions. But in general, to sum up, tokens are a new value capture mechanism. That's one. In countries like Lithuania, for example, with underdeveloped capital markets, where it's hard to raise capital, tokens became one of the dominant ways of raising capital for all the right or all the wrong reasons. Secondly, we have seen shifts in how token structures are changing. At first there was high, as you mentioned, retail investors that would buy the bulk, but also there would be those whales that would dump, etc. Then we got some lockups. Then lockups became shorter, and even 10% on IDO was enough to dump on the community and recoup initial investment. But we are going through those, bull and bear market cycles that upregulate everything, and we are converging towards market efficiency. Maybe it will be tokenized securities, but as the traditional financial systems don't want to see security tokens, although it would be much better way of handling equity, and all the startup investments. And as you have correctly pointed, maybe many companies don't need token economies at all. They don't need tokens. but essentially they proxy equity value through tokens sometimes and help founders to raise capital. But more and more, we are departing from that, and hopefully in the future we'll see security tokens helping to tokenize that. And I think in Estonia we have something called Funderbeam that plays according to the rules and tries to do tokens. But in essence, we should see, the funder beam model to evolve into security tokens in the future, and then any of you would be able to invest in startups, even $10 or more.